Yes, you're good to have you back again. And cryptos right here. In this video, you'll be learning market structure. In the previous video, you learned correction. So in this video, you'll be learning what the market does over and over and over and over and over again, which is impulse and correction, impulse and correction, impulse and correction. So you'll be seeing that in this video. Okay, so as you can see, this is an uptrend. So you can see the impulsive move, and there is the correction. And we have a start of another impulsive move. It is important to note that this structure only happens if the market does not change from uptrend to downtrend or downtrend to uptrend. And once the impulsive move is done, there will be a correction and then another impulsive move. So as you can see right here, first we had an impulsive move, right here. So that is the impulsive move. You could see the inducement. That's the last valid pullback. Then we saw another move that took out the inducement. Can you see? And that move is called correction. Right there. So that's a correction. And then another impulsive move started from the end of that correction. And it went higher than the previous impulsive move. So this is basically market structure. This is what the market is doing constantly on every time frame, from the highest to the lowest time frame. The market is always making impulsive moves and correction, impulsive moves and correction. So let's look at it in a downtrend market. So you can see the impulse. So we'll mark the valid pullbacks. Remember, you can join us on Telegram, where we help new traders with mentorship, and we also provide daily trade signals. So if you feel that will help you improve your trading results, the link is in the description. Also in the description of this channel, you will also see the link to join us. You are welcome. So you can see the market making impulsive moves and corrections. So your ability to identify these impulsive moves and these corrections will greatly help to increase your chance of success in the market. It's not a guarantee that you'll be profitable automatically, but it will take trading away from a gamble to a skill. So you can see the first impulsive move right there before we add the correction. So we had an impulsive move, then there was a correction, another move that took out inducement. So that's an impulsive move. Then you see the correction move right here. See that move? Exactly. So it took out the inducement. So that move is called correction. Remember, we said the correction could be a single move and it could be an impulse. So, and it could be an impulsive move. Okay, So in this case now, the correction is a single move. Then after the correction, we had another impulsive move to the downside. This time around, lower than the first impulsive move. Right there. Can you see? So that's another impulsive move. Okay, so this is another impulsive move, and after the move we add inducement on that impulsive move. Then we had another move that took out the inducement, which is the correction. So you could see for yourself that the market is constantly making impulsive moves, correction, impulsive move, correction, impulsive move, correction. That's what the market does. So you can see right here another impulsive move to the downside. Okay, so your ability to identify this in the market is same as the ability to identify the market structure. Okay, so if this video is helpful, don't forget to subscribe, don't forget to like, don't forget to share, comment if you have questions, join us on Telegram. See you in the next video.